Hey everyone, this is another video in our weekly series on stocks market recap and review, where we are going to see what happened last week and see if we can find any potential setups for next week. So the topic of this video, apart from doing the weekly review, is how to play breakouts. So we are going to talk about the markets first, but then we are going to talk about how do we find breakouts and then how do we play them well. So looking at the market dashboard, we can see that on Friday we actually had a small rally, but then we ended up really bad. We actually ended up almost even. The price dipped quite a lot all day. So there was slight bullish momentum, but overall the markets were actually quite choppy and slightly bearish. And you can see the biggest movers here. I'll just ignore those. This is interesting. So IWF had a trade worth about $1 billion. This seemed like a sell because we looked at the charts and we realized that when this trade occurred at this particular sort of time, there was a huge red candle and there was a lot of volume on that red candle. So this seems like a sell. So let's see what happens for IWF in the next couple of weeks, because this is slightly concerning. I have no idea how to interpret these like $1 billion sell trades. We'll actually see in the next few weeks. Then we have some other trades, NCLH. So someone dumped $22 million worth of shares on Friday. So there was some dumping going on AMC, GME, BlackBerry, Nokia, and all these meme stocks, and some sort of solid stocks as well. So this $2,200 million trade was actually a sell trade as well. So there was that going on Friday. Then the sectors, we can see real estate did really well, but then communication services did not do well. On the stocks market prediction side, we can see that the tool is predicting a bullish market sentiment, but look at the probabilities. Those are only like 52-58%. Those are very low probabilities, and that usually means we either see a slightly choppy market or we might actually go down a little bit, and then maybe we see some bullish momentum. So just keep that in mind, please. And other than that, there is nothing sort of significant here. So let's open up the SPY chart, and we can see that we are right on the final resistance. So we have been talking about this resistance level for quite some days now, and we have finally sort of arrived at that resistance level again. So what we want to do here, I like the fact that the volume is actually decreasing here. So what we want to do is we want to keep consolidating here, and then we want to do a breakout from this 420 level with some high volume. So you can see the downward sort of trajectory in the volume. We want a candle where the volume increases significantly, and that is going to be a really good signal for the markets, because then SPY is going to break out with some volume. So please keep that in mind. Otherwise, I would, since this is a double top, I would actually like to see some sort of a pullback towards the 20 and 50 moving average. For QQQ, again, very similar. We have one resistance here, and then we have the next final resistance here. So we are again sort of reaching towards these resistance levels. But one thing that I don't like is that when we are going up, the volume is actually decreasing. So unless we do a nice breakout with some volume, this low volume on all these green candles is actually sort of a sign that there are not that many market participants, especially because the volume is so low. So let's actually wait and see what happens here. Just this low volume is slightly concerning. I would now want to see a breakout, or we might again do a dip here. So with SPY and QQQ, it's hard to sort of give explicit direct predictions, because it's so hard to predict SPY, QQQ, and other indices. So that's why we want to talk about both sort of ways the price can go. And then again, you can see that we have one resistance level right above the price. Let's hopefully break it. All week last week, you can see that the 5 candles here, the volume was very low. So I'm really interested to see what's going to happen next. And this might be the reason the AI is not confident as well, which is why it's only giving very sort of 50, 56%, 58% confidence scores. So let's keep that in mind. We might see a pullback because of this low volume, or if we break out of those levels, then that's a really good sign for bulls. Now, instead of sort of going into individual stocks, what I'm going to do is I'm going to just talk about how to play breakouts, because with these weekly series, I want to sort of have a theme for each video, and the theme for today is how to play breakouts. So let's actually talk about what's the best way to play breakouts and earn a lot of money, because breakouts is one of the best strategies out there, for especially for newcomers and for experienced members as well, and they're pretty easy to play. So what we are going to do today is look at our Scany tool and see how to play breakouts. So this tool can be used to find really good breakout plays. So let's actually start. So we are going to go back and see some data from, let's see, last Monday, because we want to go back and see some breakouts that happened in the past and how they eventually panned out. So last Monday seems like a good time. Let's have the minimum volume as 250k, and then we are going to use our daily breakout scanner. We have about 22 breakouts. I'm going to sort based on the volume, the relative volume, because whenever a breakout happens, you always want higher volume. So the relative volume, today's volume divided by yesterday's or some average volume, should always be greater than at least 1.5 or maybe 2 as well. So that's what we are going to look for. So we have HOG as the first breakout. Let's see what happened with HOG. All right, and this was May 17th. So this was the breakout, right? So this was the breakout, right? And you can see that the very next day we dipped back, and the very next day we actually sort of broke below that resistance line that we had previously crossed. So these setups are called fake outs, where there is a breakout, that breakout looks good, but then the price goes below the support line and that becomes a fake out. So what you want to do with these kinds of setups is you just want to exit as soon as we go below this newly formed support area, and you just get out. So let's say you entered here at about, let's say 50 or 51, then you're going to just enter at about 49. So there is going to be a $3 per share loss, but that's going to be worth it, because the breakouts that are going to work well, those are going to work really well, and they're going to offset all your losses. So please be strict with your stop loss when you're playing breakouts. Let's look at something else. So we have MMX. Let's see if MMX worked. Right, this seems okay. So this is again May 17th, this and this again went down. So again, this did not work too. So we can see the reason these breakouts are not working is because the markets have been slightly choppy. Growth stocks have been doing well, but the remaining market has been slightly weak. So when the markets are weaker, you'll see that many breakouts don't work. They're just fake outs where they break out, but then they start going down again. So this was again a failed breakout. So let's see if we can find something else. RLGY. All right, so we have again this one. So this one never really crossed this resistance level below, right? So this was a good one, because we can see that we have stayed above that resistance level. So we have stayed above that newly formed support level. Previously it was a resistance level. We actually crossed it I think 2 days ago. So this would have been your obviously exit, but this seems okay. Now I want to talk about how do you know if these breakouts are going to pan out or not. So one thing that you always want to look for is you don't want gaps. So whenever you see gaps, that is a huge red signal. So you see this gap on the breakout, no, don't go into these types of breakouts, because more often than not they do not work out. Then you see a gap again, and that gap never gotten filled. So whenever you have these gaps in a stock, those stocks slightly sometimes don't work that well. So just keep that in mind, and know that playing breakouts on these gapped stocks is slightly risky, and you are seeing that here as well. So let's see if we can find something else. So again, before starting these videos, I don't go over these stocks, so I'm actually going over everything live with you guys. So we have GSM. All right, this looks good. So this you can see we broke out, and this was the, I believe, the resistance level that we broke out from, right? You can see, and so you enter right away, right? And you see this huge red candle. So don't worry about that candle, because your job is to exit when we break that sort of breakout, and when we do a fake out and actually go below this line. But since this is now a support, until we go below this line, you are not going to exit, because you're going to trust the process. You're going to buy shares, and then you're just going to sit tight. And if you had done that, then let's say you bought at the start of this day, let's say maybe 4.9, right now you are at 5.2. So again, you have like 30 cents profit in just a couple of days. So please know that. Please don't just exit right away if you see any large red candle, although the volume was high here. Still, you have to stick to a pattern. Always exit when we actually cross that support level again. Let's actually go back more. So maybe May 3rd. Let's see if we can find data for this. We have a daily breakout, and let's set a volume as well. So we have quite a few breakouts actually from May 2nd. So let's look at a few of these. I'm again going to sort by relative volume. I don't want to see a significantly large relative volume, because those are mostly penny stocks and those are pumps and dumps. I want to see anything above 2 but less than 10 or 20. So that's what we are going to look for here as well. So let's see, we have FTX. This is FedEx, and May 2nd would be this. So this would actually be the breakout from this level. Actually, the level is actually this, somewhere around this, right? And this was the breakout. So if you had entered here, right, the price was, let's say, about 300. The price right now is 316. So that's like $16 shares, $16 profit per share, which is pretty nice. So that's how you play these breakouts. You enter. You should never sort of exit unless you go below the newly formed support level, and then you just ride the entire wave. So until we actually, let's say, we are in an uptrend, you can see the moving averages are facing upward. So until we are in this uptrend, you're just going to keep your shares and yeah, ride those profits. So this is a pretty nice breakout here. Where we broke out, we went up, down, we had a dip on the support, and that happens quite often. When you break out, you actually come back and touch that same level again and then start going up again, and that's exactly what's happening here. This was a good one. Let's see, we have KMX. I know about this stock, so let's see what happened with this one. This was not a good breakout, right? Because you can see we broke out here, right? And then the very next day, now this is why you need to exit right away. You cannot hope with these breakouts. You can see we broke out. This is the level we broke out. The very next day we broke down again. So you exit right away on this red candle. Otherwise, you would have all this extra loss that you should not have had you sort of stuck to a certain discipline. So not good here. Let's see if something else is here. HD. So again, relative volume is 1.15, not high at all. So let's see what happened. Again, this is why you want to see higher relative volume. So since the relative volume was not high here, so this is where we broke out. Sure, you can see that this is the breakout here. There was a nice, we went from 326 to about 345. So that was a nice profit. But you see this huge bearish candle. So even if although this is green, this is a bearish candle because this is an inverse hammer, which is a bearish candlestick pattern. So you would actually try to exit here, or you just wait until we go below this. But please take partial profits when we are in an uptrend. So let's say you buy 10 shares, sell maybe one here, and then 5 here, and then wait for the remaining 3, and then you sell the remaining 3 either for a break even or for loss, but your total is still sort of profit. Let's see if we can actually go back more. Let's do maybe April 19th. Right, we have daily breakouts. Let's see if anything good pops up here. Not many breakouts here, so let's see how did PetQ did. All right, we are on April 19th. This is where the breakout happened, and you can see this was the resistance level, right? And we have still not broken that support level, the newly formed support level. Previously it was the resistance. So you enter here, right, somewhere around here, and you are still positive. So you actually went, in the next few days, you went from 36 to about 45. So that's a $10 increase per share, which is why these breakout strategies are so easy to play. So you have just one signal in Scany, you sort based on relative volume. You look at the chart, and here is a great tip. So the more times that resistance level was hit, the better the breakout becomes, because that resistance level was hit so many times, it becomes weak, and we want to break these weaker resistance levels because then they become strong support levels. So that's a great tip to keep in mind. Let's see if we can find something else. I don't know what happened with Hon. This seems good as well. This is where the breakout happened, right? And we have actually not really gone below the price. Sure, we did here, but yeah, you would probably have exited here, but now we are forming resistance again. So keep an eye on this, because I think we are going to break out again, and then we are going to go up from here. So this was a slightly tricky case where you have this strong support level, so you want to wait a little bit because you have this anchored view support as well. But if you are sticking with your, again, disciplined approach, then you can exit right on this candle as well. Let's see something else. Let's actually go back even more. Minimum volume 250k, and then we are going to look for daily breakouts. Let's see relative volume, MGM. Oh, so Microsoft That's a good one. What's the date? The date is April 5th, which would be this. And again, not a good breakout, because you can see now this. I can actually explain why this is not a good breakout. So look at the resistance that we broke. That resistance, so this is where we broke out. That resistance had been hit only one time. That's a very weak resistance level to break. You want these strong resistance levels that had been made weak by the price, sort of when the price keeps hitting them. So that those are the levels that you want to see break. You don't want to see these levels where you only hit the price once and then you just break it. That means that's a very weak level, and it's going to get broken again. So those sort of resistance levels that we keep hitting and then we break, those levels become really strong support levels then, and that's what you want to go into. You do not want to go into these types of levels. So this resistance level, you can see we had a sort of small breakout here. This resistance level is much better because 1, 2, 3, 4, 5, 6. So we have hit this level about 7 times and then we broke out. So this would have been a much better breakout than actually, let's say, this. So please keep that in mind. Then we have MSFT. This, right? You can see this was a much better level because instead of hitting it once, we actually kept hitting it for like 10 straight days, right? We couldn't break it, and then when we finally did, we went from 249 to a high of 263. So again, pretty nice 20 or $10 to $20 profit. And then again, you keep taking your partial profit, and then the market sort of started getting a bit choppy, which is why you see this dip again. So please, when you have these breakouts, you are going to see huge profits in the next few days. When the markets are good and when the markets are bullish, then what you're going to see is you're going to see long-term uptrend. So I'm going to show you an example. So this is actually a really nice one where you can see that here, right here, this was a decent resistance level, because let's see, we had hit it some maybe around here, like this was a range. We hit it here, and then we kept hitting this here 1, 2, 3, 4, 5, 6, 10, 20 times, and then look at the volume. Always look at the volume. Look at how high the volume was. So this was like 10 times a relative volume based on the previous average volume. So you enter here, and then you are not going to exit because the newly formed support never broke, and you went from, let's see, 23 to a high of 56. So that's 100% profits in just 1 or 2 months. So that's why you want to play these breakouts, because over the last 20 years, although the accuracy of these breakouts is 30, 40 to 50%, it's not more than 50% at all. If you couple them with really strong fundamentals, then sometimes the accuracy goes to 60 or 70%, and that you can actually do by looking at the market cap, the estimates, the revenue estimates, earnings, and everything else. But if you just play these breakouts, then they're about 40% accurate, but their average returns are still much larger than playing other strategies. So as you can see here, so this breakout, if you had caught that, then you would have been very happy. I believe Tesla had a very similar breakout. Let me show it to you. You can see that this resistance level, we actually broke it right here. The volume obviously was not that high, so let's find something better. So this one was decent. You can see that the slight uptick in volume. So if you had entered here, let's see, you never exited. You never exited. So you entered here, and you can see that we never crossed this newly formed support. We went to it, but we did not cross it. So let's see, from 334 to about 856. So that is a lot of profit, about 100 to 200%. So you want to keep playing these breakouts with strict stop losses until you actually find the very good ones. And how do you find the good ones? You look at the fundamentals. If the company has been having really strong earnings, if the future revenue estimates are really high, then those are the good ones. And then if the fundamentals of the company are not good, then they're probably bad. You don't want gap ups and gap downs. You want a smooth breakout with high volume. And if you keep doing that, then you're going to find these 100%, 200% baggers from the shares perspective. You can follow the same principles on 1 hour chart, or let's say 30-minute chart, or on 4 hour chart, to find breakouts for swing trading, for long-term trading, or for day trading. And that is going to make you a lot of money. So for options, we usually just look at the 15 or 30-minute chart and see if we can find breakouts there. But for shares, we look at the daily charts and then find a breakout from there. I'll actually show you a very beautiful breakout that we found on the option side this week. Yeah, so we played this for about 100% profits, and this was the breakout. So you can see the increasing volume here actually. So this was a breakout, but what happened was it broke out, but the candle was not big. So I waited, we actually waited, the Discord waited, and we went up, then we did the dip. So remember, when we break out, we usually always fall back on that level again, and then we start going up. So we entered right around here, right at this candle, and then we just sort of had some contracts that went up from 187 to about 217. So a $30 increase in just a few hours, that's like 200 or 300% increase on the option side. So these breakouts happen everywhere. Just sort of follow the principles. You need high volume, no gap ups. If there is any fundamental or any other reason, if an event has happened, then these breakouts are really strong. So I hope, although we didn't find a lot of good breakouts in the last few months, I still hope this video is useful because it teaches you how to find these breakouts, how to ignore the bad ones, and how to find the good ones. And you have actually seen some pretty nice breakouts in NIO, Tesla, and some other stocks as well. So I hope this was useful. Please subscribe to the channel if you like anything, or if you don't like anything, please leave us a comment. Thank you so much. Goodbye.